Hello everyone, this is Ashley Jamerson coming to you from Ashley Lambert Realty. And as you can see by the title, this is going to be another video of my credit series, Get Your Credit Straight in 2019. Today I'm going to discuss how an open credit dispute can stop your home buying plans in its tracks. As I mentioned in my other videos that I will link below, the credit score is not the only thing that lenders look at. However, it is a huge factor when determining not only how much you approve for, but also your interest rate. As you know, many consumers or future borrowers dispute things on their credit in order to clear it up and to boost their credit score. They do this because sometimes they will pull their credit and they will notice that there are some errors on their credit. Now, some of these things can be clerical errors, a shared name, or even identity theft. And wanting to clean your credit is a very normal response when you see these items reported inaccurately on your credit report. In fact, 1 in 5 Americans have reported that there are inaccuracies on their credit report. And 79% of those who were trying to fix those things or get those inaccuracies cleared up were successful in doing so. Obviously, inaccurate credit information can harm your credit and therefore increase your interest rate when you are looking to buy a home. This is why it's very important to regularly check your credit to make sure that there are not any accuracies, and so when you do go to buy a home, you're not rushing to fix things at the last minute. So let's get into disputing. Under the Fair Credit Reporting Act, consumers have the right to dispute inaccuracies on their credit. However, this can be particularly troublesome when borrowers go to get a house and the lender pulls the credit and sees open disputes, and they see that as a red flag. When a dispute is filed by a consumer, the creditor is required to label that item that is being disputed as in dispute. Therefore, an item that is in dispute cannot harm your FICO score. In fact, your credit score will have a temporary boost, and lenders know that this temporary boost may not present the accurate credit score that you actually have. What lenders are looking for is an accurate picture of your credit history, and many will require that these disputes are removed before actually approving you for your loan. And therefore, they will not seal the deal to make you a homeowner. So this issue is the reason why many consumers have to decide whether they want to dispute inaccuracies on their credit and have to wait until the dispute is removed prior to getting approved for a loan, or if they will leave the item on there even though it's inaccurate and take the hit on their interest rate. This again is why I always say regularly check your credit and keep an eye on it, just so you are not rushing to fix things at the last minute. In my other video, I discussed letters of explanation, and sometimes a lender will accept a letter of explanation, especially if it was an issue dealing with identity theft or a clerical error that you can prove, or a case with a shared name. When it comes to credit, the best defense is to always be proactive, protect your credit, stay current on all of your bills, and not to maximize all of your lines of credit. As a consumer, disputing any inaccuracies on your credit report is your absolute right. However, a lender also has the right to make sure that they are lending you money for a new home that you can afford and that you meet all of their requirements. If you have any questions, comments, or concerns about this video today, definitely leave those down below in the comments. I will link the other 2 videos from this series in the description, as well as all of my contact information, and I look forward to hearing from you soon. Bye.